Welcome to another series of our popular webinar, Invest Nest, titled Market Supercycle and Businesses on the Step-Up Mode. My name is Samta and I'm your moderator for today's event. On behalf of Kalkine Group, I am pleased to welcome our esteemed speakers from the leadership team of top ASX-listed players and a refined and inquisitive audience of potential investors. Now, before we go ahead, I would request all the panelists to mute your devices, and you may unmute yourself during your business presentation. Now, the key idea of this webinar is to present our audience with a panel of experts, speakers who would share the potential of their business growth strategies, value, and vision post-COVID-19 times. The event aims at sharing heaps of insightful information and guidance on emerging themes and breakthrough trends in the Australian market. Now, the business presentation will be for 15 minutes by each individual speaker, and it will be followed by 5 minutes of question and answer round. Now, webinar attendees can get their answers straight from the business leaders. Like I said before, all you have to do is you have to just post your questions in the Q&A chat box during the webinar, and the same will be taken by the respective business leaders post their presentation. But before we move on, I just want to put a disclaimer out there that let me inform everyone that this webinar is for informational purpose only, and it is not a solicitation or recommendation to buy, sell, or hold the stock of the company or companies, or engage in any investment activity under discussion. We are neither licensed nor qualified to provide investment advice through this platform. So moving forward, while bond yields and inflation concern continues to chart out market momentum, and amid overall economic landscape, emerging themes defining market supercycle is grabbing investors' attention. Commodity supercycle is one such theme under the investor radars amid boom in copper, iron, and oil prices. And besides, dividend supercycle is also interesting to look at. This earnings season's performance demonstrated the wide resurgence amongst Australian firms. Another interesting theme is the gradual shift of investor psychology from growth to value plays. On that note, today we have such ASX-listed players on the board that stole the limelight in the continuing earnings season and seem to have a better footing in the near-term scenario. Now, without any further ado, let me introduce you our today's honored presenters. With me today, I have Mr. Rod Sherwood, who is the Chief Executive Officer at CV Check, Mr. Corey Nolan, who is the Managing Director at Platinum Resources, and Mr. Mark Wallace, who is the Director at Renegade Exploration. So now let's first welcome our first speaker, Mr. Rod Sherwood, who is the Chief Executive Officer at CV Check. CV1 is an expanding business with growing revenue streams through the provision of its checkpoints to employers, industry associations, and individuals via CV Check brand on its proprietary online platform, cvcheck.com. Now, Mr. Sherwood was appointed as CEO in 2016 after heading CV Check's corporate finance function since 2011. He has managed a number of successful seed investment rounds, commercialization Australian brands, and its successful IPO and ASX listing while taking responsibility for CV Check's accounting and tax. Welcome to Kalkine's Invest Nest, Mr. Sherwood. We will just share your business presentation deck and you can take over the virtual stage.
Thank you, Samta, and good morning, everybody. CV Check is, as you heard, an HR tech business. We have had an interesting history these past 5 years since listing, and you're now coming into the company at a point in the story where you have growth, a cash flow neutral, sustainable business with a very strong balance sheet, a very solid, large and growing customer base, and in particular right now, a point of inflection with the acquisition of Bright People Technologies to leverage that customer base. So today we'll be covering information about CV Check, Bright, the strategic rationale for the company, and the merge co, and then finally covering off with the integration and acquisition timetables. So after that, we'll do a little Q&A. So CV Check in this past year, you can see there at the beginning of the 12-month cycle, we, like so many technology and services companies, we're entering the COVID effect. It's a period in the past 12 months where you saw a decline in inflation, growth, and a whole bunch of things worldwide as the pandemic first took place. As we came out of that and our growth became sustained, you saw a share price recovery before most recently we raised capital and we're now positioning for the Bright transaction. So we'll just cover some of that history on the next slide. So we listed the company late in 2015. Late in 2016, I became CEO, and we set out on the path of repositioning the company to being one which has strong ARR and a B2B client base. You can see that's played out in that set of revenues on the right-hand side. And FY20 was heavily affected in the final quarter by COVID, but you can see there growth was still maintained. When we look at this past half, so July through to December, the company saw record revenues produced for the quarter two. We had a record half of revenue for the period July through to December. Booked ARR for the 12 months to December was also a record of 10.2 million, generated some cash, and we also produced our maiden NPAT. Now, I must emphasise that some of that was due to the fact that we had some government assistance. But when you look at the effect of COVID and where the company's positioned now in this reflation cycle, that's really not a concern. Our balance sheet is very strong. At the end of December, we had 5.2 million in cash. And subsequent to that, we've raised a further 10.5 million associated to the Bright announcement. And the company has no debt. At this stage of the economic cycle, we've got very strong tailwinds. There is still a beneficial effect of government and monetary stimulus worldwide. And that's reflected in what we're seeing in the drivers of our revenues. The job ad series is strong. We're producing a continuation of where we closed the last half. The bulk of what we're going to cover today is looking to the future. CV Check some time ago identified a need for a strategic shift, which would leverage our market position and our client base. And what we've been looking at is for getting our credentials, which we verify on all of our candidates, and leveraging those into the workforce management space. We've been casting around for a number of years, and while we were doing so, we identified Bright People Technologies, a Perth, Australia-based business. It has a SaaS business model, and it relies on the information and credentials to drive triggers in the workforce management space for risk management purposes. Has about 30 people. Last year it did 4.9 million of revenue in the period to the end of June last year. 85% gross margins and EBITDA positive in the region of 1.7 million. Importantly, the company reimagined and has rebuilt its technology stack these past 4 years. And that's very exciting for us. It really does mean that we can combine the two entities to great effect. I'll go into that now. If we go into a couple of slides forward, we can look at the strategic rationale. So what we saw in our strategic review 3 and 4 years ago was that digital transformation, the evolution of software, devices that we all use day to day, and the telecommunications system across the past 20 years have led to vast changes in the structure of workforces. By that, as in today, we can communicate with each other across borders. We can have people who are specialists in their fields in the Philippines, the US, the UK, contribute to the workforce in Australia readily over telecommunication systems. We now have also the strong push of casualisation and people working for themselves in smaller businesses such as Uber drivers, delivery drivers and the like. And that plays out across almost all services sectors as well. What that's led to is a more complex workforce where companies now need to think in terms of employee, vendor labour, labour hire, casual workers, and people who come in through offshore telecommunications ability to contribute to the workforce. And all these things still require companies to understand that their people have skills, they need to be paid, and there's a whole bunch of regulation environment that they need to deal with. That requires two things that are new. People need to be able to share their credentials in real time, and the workforce management systems need to be able to report in real time so that companies can manage the risk in their workforces. What that's led to is a need for what we call a credentials-based workforce management system. If we go to the next slide, you can see that we can combine the two companies and get that capability now. So CV Check can take its current customer base with its millions of verified credentials, and we can use those through privacy and permissioning to power the information that is needed to drive workforce compliance management in Bright's technology stack. And these system modules include onboarding, inductions, contractor and workforce management, logistics, rostering and the like, and worksite access functions. So what we're doing is we're able to, when we combine the two together, fill a customer need for workforce compliance, but do so in a way that reflects the real-time evolution of what a person's credentials are. Creating this unified stack means that we also position the group strongly ahead of what we see as a global catch-up in the way that workforce credentials are exchanged, and that will go digital. We also improve the quality of our revenues. CV Check goes from a really good ARR, which is transactional, but very high return rates, to also adding in SaaS-based license fees. We get that for a modest 15 million at the original price of 16.5 cents that we raised at. So if we move forward to the next slide, we can see what that stack then looks like. In the unified capability, we have background screening, which is where CV Check's strength is. We do identity verification, police criminal history, qualification, education, referencing, and so on. Now though, what we can do is we can take that core set of identity and credentials, and we can augment them with things like training and induction modules, compliance modules. So that adds to the richness of the set of credentials that we can report on. And then once people get to a certain level of credential qualification in our workforce, they can then be rostered into and deployed to sites. The other benefit of that is that the companies can see their workforce in real time. We also benefit from recurring compliance. So we're greatly extending the potential share of wallet that CV Check currently has from its client base. And we're doing so in a way that's been already validated by the model which Bright are operating. I spoke earlier about the complementary potential of the customer base. When we look to Bright, which is very West Australian focused, we see entities like BHP and Roy Hill. And when we look over at CV Check's client base, we see Northern Star and Saracen in the gold sector. If we look at Woodside, which is in oil and gas, we can see in CV Check's client base, Impex and Crown. And there are these similar parallels across the two client bases. What is key to understand here is CV Check's blue chip client base is about 10 times larger currently than that of Bright. Bright did 4.9 million of revenue last year. So there's a lot of leverage in the transaction for us in cross-selling to our existing client base now, addressing a need which we're aware of already. So if we look back and we look at the combination based on the COVID affected FY20, you can see that both companies largely preserved their revenues, so high quality revenue bases, but we both had a very difficult final quarter of last year. When we look at the current year, and particularly we look at CVCheck's current first half and what we're experiencing currently, which we'll announce on in weeks from now, you can see that there is a really solid revenue base now of over 17 million. Gross profit is there, so the margin is good, and we expect that to continue rising from when we put the combination together. And we've got operating profit at EBITDA level. So it's a good combination, which, given the fact that we're in the reflation part of the cycle, will only improve from here. This is a busy slide. One thing I just want to mention, which is key here, is the Bright team and the escrow. So the Bright team are coming across. We see a lot of high value, great performers there, and we will be bringing them into our company as if it's a merger. Additionally, they're taking the bulk of the consideration, or actually all of the consideration, is being held in voluntary escrow until December 22, which is a very long escrow. They believe in this story. So just recapping on the cause for the transaction and the strategic benefit of it, there's been a very fast-paced digital change. And what that's meant is that employers now need to better manage their workforces, which are increasingly complex. With that, though, is also a need to help employees and contractors participate in that process of information sharing. So what's required is a credentials-based workforce management capability, which we are creating. We end up with SaaS revenues. It adds further scale. It's high quality and customer proven. And we're very well capitalized now that we've finalized our raise. We've got in excess of 10 million, currently 15 million. And by the time the whole transaction settles, we'll be in a very strong balance sheet position regardless. So we're progressing well with what we're putting together. The integration team is formed. We have people working on the integration now. We expect the transaction to close ahead of schedule. We've already completed our notice to shareholders a couple of weeks ahead of schedule. That will now take place on the 31st of March, and we begin the settlement process on the 1st of April. So we're a couple of weeks ahead of the indicative transaction timetable that we announced, and we're pushing forward. Both companies are experiencing growth at the moment. So if we go to the final slide, I'll just cover where we expect to take the brands in this next little while. So we will now be operating through two brands, CVCheck and Cited. There is a legacy brand which is being migrated from Enable to Cited now inside the Bright entity. And we will start to communicate with investors in the name of CV1 Group once we complete the transaction, which is expected in early April.
Thank you so much, Rod, for this insightful presentation. And we're pleased to know about the business prospects of CVCheck. The recently launched products that provides wholesale services to other large international screening and verification players is very exciting. We wish CVCheck good luck. And before we go further, we have some questions in the Q&A chat box for you. Let me read them out, and if you could just address the same for our audience, it will be really great. The first question is, how well are these near-term events aligned with the company's long-term objectives and shareholders' long-term growth?
Very closely. So CVCheck has a very large customer base, Mike, and from our perspective, we're currently strong in the verification part of the reg tech space. We believe that leveraging that information that we hold into workforce management and helping with the risk management side of the reg tech space is a vital addition to our portfolio of service that we provide to our customers. Now, I said earlier that we have a very strong client base. We've served over 30,000 businesses. Every quarter we see about 6,000 of those. We've verified information for well over 1 million people. It's a big client base, but we only have a very small share of wallet. We've been working on making sure that we have sales, distribution, and reach. And now we need to take the trust that we've earned with those clients and provide them a wider range of services. What we're seeing at the moment is there is a reflation cycle on across the global economy. CVCheck participates in that, as do Bright, through the employment of people as assets are being built, infrastructure, extraction of ore, and so on and so forth. So we're very exposed for investors to that part of the cycle. I think from our perspective at the moment, it's only the beginning, and 2021 itself has opened very strongly, calendar year wise. So we've picked up from where we left off, and there's continuing momentum there.
So we have another question from Sandra Jenna. Sandra's asking, as CV1 has roped in several international clients, how does it plan to enter the international market, Rod?
Okay, so we already quite recently announced that we are providing wholesale services to large international screening companies. We're pre-commercialising that still. It's probably, at this stage, it's about 5 months old, and we're seeing good traction there. What we do is a structural rollout where we announce something, we pre-commercialise it, learn the things that we need to do, and then we put weight and muscle behind it. Our first major one of these was when we extended into providing integrations with other software companies in the HR space. That has recently grown at rates of over 100%, and that's been going now for about 2.5 years. It's driving a lot of our growth. It's certainly helping us expand our margins, and we expect that this international rollout will do similar. However, it's only in the pre-commercialisation stage at this point, and we expect a lot more muscle to be put behind that in 2022.
Thank you so much, Rod, for sharing and reflecting upon the business outlook and vision for CVCheck and answering our audience, being very patient with them. And I see there are a lot of other questions. There are a lot more questions for you, but we will have them probably answered towards the end of the webinar, and I would request you to please stick around. Okay. Audience, I hope that this Q&A session was insightful, and you can also write to us at info@kalkinemedia.com for if you have any other specific questions, and we promise you we will get them answered by Rod post the event and get back to you. So thank you so much, Rod, and once again, and I hope to see you towards the end.
Thanks, Samta.
Now, next on the event, I would like to call upon Mr. Corey Nolan. He's the Managing Director at Platina Resources, and Platina is an Australian-based company focused on returning shareholder value by advancing early-stage metal projects in gold, zinc, scandium, and other precious metals through the exploration, feasibility, permitting, and into development. Now, Corey is an accomplished mining executive and experienced public company director with more than 25 years of experience focused on the acquisition, funding, exploration, and development of resource projects. Most recently, Corey was the Chief Executive Officer at Sayona Mining Limited, and he was previously the Managing Director of former ASX and AIM listed Leishon Resources Limited and Managing Director and Non-Executive Director of ASX-listed Elementos Limited. Welcome to InvestNest, Corey. It's a pleasure to have you, and you may go on with your business presentation.
Thank you very much for that introduction, Samta. Appreciated. It's been over 12 months since I presented to the Kalkine audience, and we've had quite a large shift in our strategy from overseas assets back to Australia, and very much focusing on gold. So in my presentation today, I'd just like to take you through that new investment portfolio that we have and the upside in our story. So Platina is a 19 million market cap company. We've got a portfolio of investments and assets in the specialty, the precious and base metal sectors. They're all at various stages of development. Our strategy is to identify, acquire, and start exploring these assets and moving them towards development. And then what we do is we monetize those assets either through sales or joint ventures, depending on the asset's technical and financial capability that's required to move it forward. So the upside in the Platina story is now really going to come from our exploration activities in gold and partly in palladium through our joint venture in the Money project in Western Australia. And we're also very actively looking at some M&A opportunities to really build out that portfolio in Western Australia. But we also have quite a significant portfolio. It's about $19 million worth of liquid share investments. And these are in companies that we believe have considerable upside. So part of our strategy this year is to look for opportunities to realize value from those assets by selling them and then using the funds to explore our existing projects and doing it in a way that we don't have to dilute our share capital structure to fund those projects. And we also have a portfolio of other assets. They're really the historical assets of the company, and we're going to be looking at ways of unlocking value from those assets and generating upside for shareholders. So the Platina investment proposition is best reflected in this slide. So we currently have a market cap of about 19 million. We have $19.3 million of liquid share investments. At the end of the last quarter, we had 1.2 million in cash, implying that our other assets, so our Challa gold project, our Platina scandium project, where there's been $16 million invested, our interest in the Money joint venture, has a negative $1.7 million value at the moment. So what I want to get you to, I'm hoping to pitch to you in this investor presentation is that we're significantly undervalued both in our portfolio of investments and assets. So our strategic shift in the last 12 to 18 months is really to move away from the overseas assets and towards gold. We're going to be very much a precious metal focused company. We're delivering on that strategy through our acquisition of the Challa gold project in Western Australia. We've made a new application for a new project called Mount Naira. We're actively looking at new M&A opportunities, and over time we'll be looking to unlock the value over those other assets and divest those assets as we need. So our new project, we acquired the Challa gold project at the end of 2020. It's a large ground package of nearly 300 square kilometers spread across 2 licenses. It's in a very prolific gold producing district between Youanmi, Sandstone and Mount Magnet. And it's an area that's just been unexplored because there's some outcropping soils across the tenement package, which has just made exploration a little bit more difficult. So there's very little modern exploration in the area, and we're looking to obviously take on that task of trying to look through those soil covers and identify targets that might be below the surface. So we have 2 tenements, quite different and distinct geology in both of the areas. Our Challa West target is situated on a fringe of greenstone belt that runs through the western part of the package, and it's also got the Challa shear zone. And in the northern areas of the Challa shear zone, there are a number of multi-million ounce gold deposits. So we think that we have very favorable rocks and structures here for identifying significant gold deposits. And then we also have our Challa East package. Again, it's an area that's pretty underexplored, although there's lots of different workings all around the package. There's been a lot of rock chip samples there with up to 3-4 grams, but it's just never had any systematic exploration. So what we've been doing over the last 3 months is a very large soil sampling program across the package. We have our geologists and field assistants go out taking samples across what we believe are prospective areas that we've identified through our geophysics. And we're building up a large grid of soil samples across the whole package, and then we're going to focus in on a number of those areas for drilling. So we've just completed our third major program there. We're about to do another small program, and hopefully within the next 2 months we'll be in a position to start doing some RAB drilling, looking to get down to bedrock and identify some anomalies that we could then go and follow up with some RC or deeper diamond drilling. We also recently pegged the Mount Nara project. And what we're looking for here is a geological environment that's sort of analogous with the Julma PGM nickel discovery. It's about 500 kilometers to the south of us, but we believe that we have a very similar suite of rocks here and a very active structural environment that should be conducive for the formation of mineral deposits. We pegged this late last year. I'm expecting this tenement to be granted sometime in March or April this year, and we'll immediately commence a very similar soil sampling program that we did at the Challa project, looking to start that process of identifying some targets for drilling. Patina also owns a 30% interest in the Money joint venture. The Money project is located about 100 kilometres from Karratha in Western Australia. It's an extremely well established mining district. There's processing plants in the area. We have very good access into this project. It's a project that has historically had a significant resource of platinum, palladium, gold, and rhodium, and they're currently all metals that are performing extremely well. We've actually seen, in the last 12 months, we've seen record prices for gold, platinum, palladium, and also rhodium. And what we're doing is working with our joint venture partner on taking this project towards getting a JORC resource, and then we'll be in a position to start assessing what the development options are for the project. And we're expecting to do another drill program here, hopefully in the next month, as part of that program to start moving towards a JORC compliant resource. But certainly the significant increase that we've had in metal prices in the last 12 months has really created a lot of value in this project and a lot of optionality around how we may be able to take it forward. Patina also owns the Patina Scandium project in central New South Wales. It's a project that Patina has historically invested over $16 million in. We completed a definitive feasibility study on the project in 2018, and we believe it's the highest grade scandium deposit in the world. Scandium's used as in solid oxide fuel cells for power generation, and it's also got some applications as an alloy with aluminium, and we believe that there is a significant amount of potential in that market. We've been actively looking at trying to secure offtake partners for this project. It's quite a slow process because the market's quite small. But just recently, there has been a lot of interest generated in the scandium industry. Rio Tinto, the world's one of the world's largest mining companies, has decided to start producing scandium from a titanium dioxide feedstock plant in Quebec. And I think this is a real turning point for the scandium industry. Many of the potential customers in the business have always been concerned that there isn't a Western world of source of scandium for the market, and so by Rio entering the market in Canada, that really opens up the project to being developed. I believe that our scandium project is attributed very little value in our market cap. If you take our total market cap of $22 million with all our investments and assets, you can see that it looks extreme. Our value of our scandium project looks extremely cheap. Imperial and Scandium International are the only other two pure play scandium development companies in the world. They have no other assets other than their scandium projects, and they're getting attributed significant valuations in their market capitalization for their project. And then there's a range of other potential companies in the world looking to also develop scandium as part of their metal complex, and they also have significantly higher valuations than Patina's share of the scandium project as well. So we think that as we start to realize value from this project, there will be significant value upside. Patina has 3 investments at the moment. Our primary investment is in Major Precious Metals. It's a Canadian listed company. They acquired our Skaregard platinum and gold project late last year. We received $500,000 in cash for that transaction and acquired 55 million shares, which today are valued at about $18 million at 33 cents. And you can see over the last 12 months that the major share price has been up as high as 80 cents, which would have represented a fairly substantial investment for Patina. And we believe that there's going to be some significant upside in their stock price over the balance of this year. The company is expected to release a new Canadian standard 43101 resource by the end of March, and then they're going to go straight on and complete a preliminary economic assessment, so like a scoping study under the Australian standard, and they're just in the process of gearing up to do a major drilling program in the second half of calendar this year. So we're expecting to realise a significant gain in that investment over the course of the year. We also have 2 other investments, one in another Canadian company called Blue Moon, and some shares in Nelson, which is a gold explorer in Western Australia, where again we think there's significant value upside in both of those stocks. So it's going to be a busy period for us over the next 12 months. We believe that we'll have the potential for significant share upside, mainly driven by our exploration and development activities in Western Australia, particularly as we move towards drilling at Challa and moving Mount Naira forward. We're hoping to be able to put news flow out about our M&A strategy and building that West Australian gold portfolio, and then the news flow that'll come from unlocking and realizing value, the value of some of those other investments that we have. So thank you very much. Happy to take any questions.
Thank you, Corey, for this insightful presentation. And we are pleased to know that Platina Resource Building and its presence in Australia with high value metals, including gold. We wish you all the best. And let's see, we do have some questions in the Q&A chat box. So let me read them for you. Lean Parker has a question for you, which is how well is PGM funded to undertake its planned activities during 2021?
Yes, okay. So at the end of the last quarter, we had $1.2 million in cash, and we've got $19 million worth of investment. So what our plans are this year is to realize value from those investments and use those proceeds to fund our exploration activities in Western Australia. And that way we minimize diluting our share capital. So that's really the key objective on how we'll fund ourselves.
We have another question from Jared. Jared is asking, what are the company's key areas of focus in 2021?
Yeah, so it's going to be our gold exploration activities in Western Australia. So primarily Challa, where we're actively working, and delivering on our M&A strategy to build out that portfolio. And then in the background, we'll be looking at options on how we can realize value from our scandium project to the benefit of shareholders.
We just take one more question for this session. There's RS is asking, there's another attendee with initials RS. They're asking, PGM has embarked on soil sampling programs to establish drilling targets at the Challa gold project. How far have we progressed on the project?
Yeah, so we've been working on building up some targets there, and what we were trying to do is establish enough critical mass to justify a drilling program. It's been quite a difficult period of year to work because of the weather. There's been a lot of rain up there, and you can't do soil sampling while the soil's wet. So we've had a number of delays in getting on the ground, but we've now completed 3 major programs. We're just about to do a 4th program, and we will certainly establish our drilling targets off the back of the 4th program. So I'm hopeful that certainly within the next 4 to 8 weeks that we can get on the ground and start drilling, subject to weather and rig availability. But that's the strategy.
Thank you so much, Corey, for reflecting upon the business stance and answering our queries of our audience, and also for sharing your vision of platinum resources. And audience, we hope that this Q&A session was insightful. Like I said before as well, you can write to us at info@kalkine.com if you have any specific questions, and we will get them answered for sure by Corey post the event and get back to you. And also, if you have any questions that you would want Mr. Corey Nolan to address, you may continue to post your questions in the Q&A chat box, and we will have them answered towards the end of the webinar. So thank you so much, Corey, once again.
Thank you very much.
So moving on to our final speaker, who is Mr. Mark Wallace. He's the director at Renegade Exploration, and Renegade Exploration Limited is an Australian-based minerals exploration and development company. As apart from the company's gold project at Yandal East, Renegade also owns about 90% of Yukon-based metal projects located within the highly prospective Selwyn Basin in Yukon Territory, which is in Canada. And Mr. Wallace is a finance professional with a background in economics and finance. He has spent almost 20 years working for both major and boutique investment banks, specializing in global materials and energy sectors. He also spent the bulk of his career in London and Sydney, identifying, advising, and financing early stage and pre-development mining and energy companies. Now, let's welcome, Mr. Wallace to InvestNest. And the floor is all yours, Mark. Please, if you could just share your business presentation with our audience.
Great, thank you. Thanks for your time. Hopefully we saved the last presentation as the best one. So thanks for your time, everyone. So just quickly presenting Renegade Exploration. It's been a busy couple of years for us at Renegade. My chairman, Rob Kirtland, is another finance professional. He's been doing a lot longer than me, similar experience set. He has introduced small cap companies and micro cap companies to the ASX in the past. and had then taken out at fundamentally a lot higher prices than where they IPO'd at, and has had very good results there. Renegade Exploration in the last 2 years has been concentrating mostly on its Yandal East project. That's predominantly in Western Australia. Our strategy has always been to be in world-class jurisdictions. We've seen with the COVID crisis and so on that it's been difficult to travel and move around and work on projects. In WA, it's been a lot easier, and our newly accessed Queensland project we've now added to the fold. We like so great jurisdictions close to infrastructure and good support. We prefer jurisdictions with great understood geology, well understood geology that have been underexplored for various different reasons. We use well-renowned consultants and prefer advanced projects where we can. In the year 2020, with COVID sort of causing issues for travel and movement between March and sort of August and onwards, we spent a lot of time on the ground at the end of 2020 doing a lot of geophysical work to better understand the project. Located on the eastern side of what we call the Yandal Belt, we're 25 kilometres due east of Jundee, which is Northern Star's large mine there in the region. There's a new project, a new mine that Northern Star's developed called Ramone, which is just down the southern part there of the map. Very much specifically gold focused. At the start of 2020, we did some drilling at Ward up in the northern part of the project that yielded great results, especially more work to be done there in follow up and for targeting and for new prospects. With the issues with COVID, then we went back and did a gravity survey through the area and through the region, and I'll talk about some of the results from that going forward. So we did the high definition gravity survey. We then followed up in late December with a drone supported airborne magnetic survey. And then earlier this year, completed about 2 weeks ago, we did a ground DM survey, specifically focusing on the richest prospect and the Baxter Andrews in the south. During 2020, our Yukon project, we decided to rationalise, and with the recovery restrictions, we couldn't add as much value to the Yukon project as we should have. We have new partners coming in based out of Vancouver, and they're spending time and money to take that project forward. Very, very strong zinc-led project that requires a bit more work that the guys in Vancouver are taking along. During December, we announced that we've bought into the Carpenter joint venture in Queensland, predominantly copper focused. This is a really, really exciting opportunity for us, far more advanced than the other projects we have in the portfolio, working with a really strong partner in Mount Isa Mines, which is a subsidiary of Glencore. And it's a really exciting project there. I'll get to introduce at the back end of this presentation. So for 2021, it's going to be busy. Again, we've already been very busy with the ground DM. We've also a lot of field work with our local geologists at the Yandal East. Carpenter joint venture is, like I said, is a lot more advanced. We're in the middle of a database review now, and planning is underway on the path forward. So let's just quickly, so Yandal East and its location, 70 kilometres northeast of Wiluna, within the Greenstone Belt, 300 square kilometres on 6 granted tenements. A long strike from the higher grade Millrose resource. Great jurisdiction, WA, as we've seen in the last few years. We've seen gold production out of WA increase significantly. The Yandal Greenstone Belt has produced in excess of about 10 million ounces of gold. A lot of that is coming from Jundee to the west of us and Bronzewing to the south. Now, what we have seen here, and in WA it happens a fair bit, there's a lot of transported cover here in the Yandal East. So historical drilling has been to a shallower depth that haven't really got through the cover, and soil sampling has been difficult to use for targeting in the ground here. So then we've had to resort to more modern exploration techniques like geophysics, and they've yielded some great results. There is substantial historical air core and RC drilling here. It's had multiple owners, this property, in the last 2 decades. The better part of 110 kilometres of drilling before Renegade picked up the ground. We did another 2.5 kilometres of drilling here, mostly air core and some RC, and it's really helped us to sort of help define and understand the geology of the area. It's really exciting. Historically, Ward and Cowser, so this is just one part of the prospect up to the north. Mineralisation covers 5.5 kilometres at Ward and 2 kilometres at Cowser. Large gaps, as you can imagine, when you've got the better part of 70 kilometres of strike to sort of go and drill for. there's big gaps in the understanding of the geology and of the prospects. Depth potential is there for all to see. The best results, 12 metres at 9.8 grams from 28, 13 metres at 3 and 2 metres at 5 from Ward. So really exciting opportunities there. An 8 RC hole program drilled in 2014 identified a thick primary mineralisation, 16 metres at 1.4 grams. So what we probably say is where there's smoke, there's fire, and there's definitely a lot of smoke here. We're just now looking for the fire in this kitchen, so to speak. Just moving along. So the results of the geophysical program finished only sort of 3 weeks ago highlighted a very large conductor in our Baxter Andrews prospect. So I think 4 weeks ago I was here presenting on the results of our drone-supported aeromag, and it highlighted some really interesting opportunities in Riches at the north and Baxter Andrews in the south. We followed up with the ground DM, and this was the result we've only got in the last week or so. So the strong conductor here at Baxter Andrews. We have been back in the field and done some mapping with our geos 2 weeks ago. It's come up, we've found a previously an unknown Gossan that we've mapped at surface here. So a lot of the work in the last couple of years has really helped starting to understand and define the geological model that we're testing here in the Yandal, and just trying to do it cost effectively as well. We are in the middle now of trying to get a drill rig and access for drilling here at Baxter Andrews to drill in around this conductor, hopefully around April. As we all know, I think with a lot of the money that's being raised by gold juniors in WA of late, getting access to service professionals as far as drillers and even rigs has been quite tricky, excuse me. So that's a high priority target for us. We're really excited to get stuck into that. So just moving on, the Carpenter joint venture we introduced in the portfolio only in December. We're in the middle of now just completing that, and it's just subject to final sign off by the department in Queensland. We think that's really close by the end of the month before Easter, hopefully. We bought into this by buying out the junior partner in this joint venture. The acquisition's roughly $350,000 shares, $250,000 or in shares at the old partner's election. And so just to sort of place it in context. So when we look for good jurisdictions, that also implies a good operating environment, close to infrastructure, and if possible, a good partner as well. And we think we've hit the jackpot here at the Carpenter joint venture. It was formed better part of 20 years ago between Normandy and Mount Isa mines. Sovereign Metals was the partner that we bought out of this joint venture. They listed in 2007. This is the main asset. There has been $15 million or the better part of expended on the joint venture in the last 20 years. We've got the benefit of all of that data, and we've received that in the last few weeks from our partner Glencore. And it's been really, really interesting to see just how much work and the opportunities here. We're starting off at a 23% interest with our ability to hopefully generate some new ideas and maybe self-fund some exploration. We'd like to think that we can increase our interest in this joint venture. Prolific and substantial infrastructure in the area. You've got Glencore's main copper operating assets, Mount Isa Mines and Ernest Henry not far away. The really interesting prospect to start with is EPM 8588. That's within 2 kilometres from the Cloncurry township. So access to people, services and infrastructure is really good. Tier 1 partner in Mount Isa Mines is Glencore. They're targeting more deeper sulfides exploration here in the region, and we're going to support them in that. We think there's also some opportunities in the oxide potential closer to surface, which would be probably smaller and more discreet from a Glencore perspective, but for Renegade Exploration and its shareholders, it could have a significant impact. Again, there's a number of interesting prospects here. We started the full-blown DD with our geologists in the last few weeks. We started close to home, being Cloncurry, and I'll just sort of point to some of the ideas that we're seeing there in the next slide. So complete the acquisition. We like to think that can take place before Easter, hopefully sooner. The database is now being reviewed. As you imagine, 20 years and $15 million of explorations generate a lot of data, and we're just sort of working our way through it. There's a number of advanced projects to assess and get into. And then hopefully with travel movements, we can meet with Mount Isa or Mines or Glencore to discuss the terms and forward plans. So they've been really supportive and forthcoming of us coming into the joint venture, and we're excited to be working together with them as well. Historically, this probably gives you an idea of just the opportunity. It's probably something just sitting inside the Carpenter joint venture. So EPM 8588 is only 2 kilometres from Cloncurry town site, as you can see there on the map, along strike from a prolific copper mine that's owned by Exco, I think it's now called Round Oak, so the Great Australia Mine. And there's 2 deposits on our eastern boundary, Taipan, and also the Paddock Lode Mine. So historical drilling information is available and certifiable. Most of it's all been taken care of by Glencore at the time. And then the most recent drilling was the better part of 7 years ago by Mount Isa Mines. Numerous holes intersecting ore grade mineralisation, and the project's been under review since 2015 within that joint venture. I'd like to just draw your attention now to the selected results there from Mongoose. This was an announcement that went to the ASX back in 2014. So you can see the more high profile targets there on our eastern side of our boundary, targeting extensions of the Taipan and the Paddock Lode deposits. Most exciting one there, probably for most of us, would be the 16 metres at 4.2% copper and almost a half a gram gold from 3 metres, so basically from surface. I also like the next one, so good widths of 12 metres at 1.1% copper and 0.24 grams gold from 20, and even the deeper holes, so 17 metres at 1.4% copper and 0.29 gold from 173, including 4 metres at 4%. So really interesting opportunity here for Renegade and its shareholders to go and get stuck into this Mongoose target. It's really exciting to understand the geology here. Clearly there is something going on. We think it's dipping down to that south-southwest, and they look like they are extensions of probably the mine next door. Just need to be followed up. There's been no drilling here or work done in the last 7 years, and this is a high priority target from us. Again, in the database, we've got 155 square kilometres of permits in this joint venture. We've only started looking at Mongoose first, just by it's being close to the Cloncurry township, and this is the opportunity that's turned up already. So MIM's drilled 20 RC holes here for almost 3.5 kilometres of drilling. No work since 2014. Designed to drill and test the extensions, and I clearly think with these results they've proved that this is an immediate walk-up opportunity for us. I think, for example, there's in the peer group, there's another listed company called Hammer Metals. They've got a new discovery called Trafalgar. Some of their best results are 16 metres at 1.77% copper and a half gram gold from 149 metres. And so I think what they're showing us is that there are opportunities to find good copper deposits in Queensland, and just the work that has to be done. So we like to think that we can breathe some life into this one yet. This is just one of many targets that we're seeing in the joint venture. Just referencing our Yukon project, we took the opportunity we had interest from North American partners to come in and to take our Yukon project forward. Being in the Yukon and management, and our focus being in Australia, we decided it needed the North American capital and management team to take it forward. So Scarf Holdings have agreed to purchase the 90% of the project from us. It's a $1.65 million in cash in stage payments, and then another commitment to spend $500,000 in exploration on the ground before December 31st. So tranche 1 for us has already been received. We've got 3 more tranches to go. What I would highlight though is that the tranche payments can be advanced at any time in case they want to take the project on themselves wholly and move it on faster. Everything we've seen from them so far says they're definitely going to hit those timelines, and they're committed to spending their money in the ground there before December 31st. On top of that, upon final payment, Renegade would hold a right to a 1% NSR on the project, subject to commercial production achieved, with Scarf having an option to acquire that royalty by the payment of an additional $1 million to Renegade. And then ownership of the Yukon project will revert to Renegade if Scarf fails to meet any of the above tranches by the relevant date. Again, we haven't seen anything from them that looks like they won't do that. So it's just rationalising the portfolio through 2020. That was the right thing to do with our travel restrictions, and that's the right partner to take it forward. And we're really excited for them to do that. So there's a summary, I guess, now for 2021. We're almost at Easter. We haven't let the grass grow under our feet, especially in the Andalese project. So a lot of geophysical field programs complete now and interpreted. Got some soil sampling assays at Baxter to come back just to understand and determine the full potential for drill targets. Gold drill targets are ready based on the gravity and historical work that we've done there in the last 12, 18 months. And developing a drilling program now and talking to contractors. So that's subject to rig availability. Carpenter joint venture is almost complete. It's an extremely advanced project, a lot further advanced than, say, the Untitled East is. The data review is underway and it's just taking its time. There's a amount of data to get through, but we're excited about what we've seen so far. We are working with a very strong partner in Glencore, and we're excited to be a part of the Carpenter joint venture with them. And last but not least, I guess, just to highlight the corporate structure, 862 million shares on issue. Top 30 shareholders speak for the better part of 60% of the register. So on any given day, it can be quite illiquid. Market cap's only $5 million with $1 million in cash at December 31st. Some unlisted options, and it's just 3 of us in management at the moment. Substantial shareholders, including myself. I'm Sierra Whiskey. I'm the largest individual shareholder in Renegade. So look, we've got a big 2021 coming up, drilling at the Untitled East, and then clearly once we've concluded the data review of Carpenter joint venture, working with our partner Glencore in taking the joint venture forward in the copper market. So that's about it. I think if there's anything else or any questions, I'm happy to take them.
Thank you very much. And thank you so much for this insightful presentation. And we're pleased to know about the company's progression in supplying highly heat-resistant thermoset preparage for the aerospace industry in North America region. And we wish you all the best. And, I can see some questions in the Q&A chat box for you as well. So let me read them for you. And can I please request you to? So we have a question from Ted Jones. Ted is asking, how is RNX placed to create shareholder value in the future?
Sure. Well, I think that just comes with the understanding the 2 projects. The Untitled East is a far earlier stage, and so the best place there to add value will be to drill and understand the geology and hopefully make a discovery there. We spent a lot of time and money doing both the gravity, the drone supported aeromag, and the ground EM. That we think we've done enough work now before we can start rolling the rigs out. So drilling there is the next point, the Untitled East. As you can see with the Carpenter joint venture, the prospects there are far more advanced. So a lot of drilling has already come up with some significant opportunities. And again, they will be understanding the database more and then hopefully doing some drilling there ourselves in Queensland. So the lifeblood of all exploration companies is drilling, and we certainly love to do that. So that's how we think we can create value for 2021.
We have another question. It's from RS. She's one of the attendees, and they're asking, how is the company progressing on the discussion with drilling contractors for maiden nickel drilling campaign?
Yes, look, we're really excited to be drilling, especially Baxter Andrews. We'd love to be doing it tomorrow if we could. It's really difficult. There are some rigs available, but the toughest part is actually getting the operators, so the drillers themselves, to man it. So we've got good relationships with 3 different drillers, depending on our needs, being air core or RC, and we've got those discussions now. The earliest stage that they've indicated to us is probably April, May, subject to availability. So we've been having early discussions since January, and it's just a really tough market at the moment, especially in WA with everyone out there drilling at the moment.
Thank you so much for answering the question and answers so patiently and reflecting upon the corporate viewpoint and vision of Renegade Exploration. Audience, we hope that this Q&A session was insightful, and you can even write to us at info@kalkinemedia.com for any other specific questions. We will get them answered for you from Mark, and we will mail back to you with the same. But before we end this webinar, I would request, I can see Corey is here, and as well as Rod is here. So I would just request our esteemed presenters, Corey and Rod, to switch on their videos and unmute themselves and share a quick closing or takeaway note with our audience.
So for my part, I think if we look at CV Check now, it's a well-positioned company. We've just done a transaction which should ignite the stock, very strategic, can leverage our client base, and we're pretty excited with the position we're in. Great entry point for investors, and we look forward to working with everybody in coming weeks and months.
So for Patina, our upside is going to come through our exploration activities and our gold and palladium projects in Western Australia, and our ability to utilise our balance sheet through our investments to fund those activities with minimal recourse to shareholders.
Thank you so much, Corey. Mark, before we go on to the closing comments from you, there is one more question for you from our audience. It's from an attendee with initial AC, and they are asking, are there any other activities constituting the company's pipeline right now?
No, we've more than got our hands full with 2 awesome projects in the portfolio. So with the rationalisation last year of taking Yukon forward with a new partner, we've really got enough going on with the Andalusia and WA, and then with our Queensland Carpenter joint venture, and seeing those drilling results there, they're easy rational discussions there to be had to go and drill out those prospects. So no, we're okay at the moment.
Thank you so much. And a closing note and a takeaway note from you, please.
I'd just like to say thanks for the opportunity for putting on the event, and so we can address potential new investors and existing shareholders. And it's been great to be in good company with Rod and Corey presenting their story. So we're a lot smaller than those 2 guys, so there's an opportunity for us to try and catch up now, so an incentive. But no, it's been a really good opportunity to present the story and be with these great guys. So thank you very much.
Work, Mark.
Thank you very much, Mark, Rod, and Corey. It was a pleasure having you all, and it's an opportunity for us to have such esteemed speakers with us on our panel today. I'm very sure our audience really had an insightful session, and thank you very much for sticking with us till the end of the event. And on behalf of Kalkine Media, I would like to extend my gratitude towards each one of you for addressing our audience in such a meaningful way, and sharing your insights, and patiently answering to their queries, and with such great analysis. And thank you, Rod and Corey. I've seen that you have even typed some answers live for our audience directly, and thank you so much. I'm sure our audience are really happy. And on this note, I would also like to thank our wonderful audience for attending this webinar. We hope that all of you found this session informative. And yes, for dwelling further into equity market updates, audience, do visit us at our media site, which is kalkinemedia.com.au. Speakers, please stay abreast with market moves, stock updates, and economic transition with Kalkine Media. And also, please do visit our equity research website, which is kalkine.com. And stay tuned with Kalkine for the upcoming InvestNest webinar series in April. I hope to see you all once again. And we are very active on all our social media platforms. So please stay connected with us on Facebook, Twitter, Instagram, LinkedIn, and YouTube. And if you have any queries, like I said before, if you want to ask any question from any of our speakers, our email ID is info@kalkinemedia.com. So thank you all once again, and thank you, Mark, Rod, and Corey for being here with us today. And you all, and audience, please have a good day. Have a good day, everybody, and thank you so much once again.